How's it going, everybody? In today's video, we're going to be checking out retail positioning, and we're going to be looking at all of our different categories. We're going to look at minor currency pairs, major currency pairs, indices, commodities, and crypto. So we're going to get a look at everything in terms of what retail traders, what day traders, what the crowd is positioned on. And then if we have a most bullish and a most bearish asset, a clearly most bullish and most bearish asset, we'll compare those two against each other, against the COT data in our smart money indicator. But before we get to all that, I just wanted to show off the top setups page here for you. I'm going to remove these neutral biases, and here we go. So for Monday, February 26th, this is our complete list so far of all of our bullish and bearish biases. Now, something to keep in mind is that the Edge Finder is getting updated multiple times a day, and in some instances, actually multiple times an hour. So the data is constantly being refreshed. It's constantly getting updated. So this actually changes a lot throughout the day sometimes. But today, just two bearish biases, Aussie CAD and Aussie NZD, but we have a pretty solid list of bullish biases along with three very bullish biases, Pound Aussie, CAD JPY, and Pound Dollar. So a lot to take a look at here on the bullish side, just a couple here on the bearish side. But why don't we go ahead and hop into retail positioning. And just for fun, this is the full complete list of all of the assets that we're tracking in the Edge Finder when it comes to retail positioning. In fact, this is so much that it's actually like blowing everything out of proportion. So why don't we just start with just checking out major currency pairs? That'll bring it back to normal. So here is just major currency pairs. This is just US dollar pairs, and USD CHF is favored pretty heavily long from day traders right now at 83%. Aussie dollar is also favored pretty heavily on the long side from day traders at 65%, because the crowd is more often wrong than they are right. Whichever way they are favored, we actually look at the contrary as confirmation. So we're looking at USD CHF and Aussie USD, both favored long from retail traders, and we actually consider that to be a bearish signal here. But USD JPY, on the other hand, is favored very short by retail traders at 73%, and we would consider that to be a bullish signal from retail traders. These, on the other hand, are too close to 50-50. You can see that they're all pretty much right around the 50-50 range, and so they're all getting neutral biases because it's not totally clear one way or the other that they are clearly favored bullish or bearish in one direction. Let's check out minor currency pairs now, a little bit bigger of a list here, and we have a lot of bullish indicators here and a few bearish indicators as well. Actually, more bullish and bearish indicators than we have neutral biases. But let's see. So starting down here, CHF JPY, heavily favored short, 85% right there, of course, which is a bullish indicator for us, like I've already mentioned. But 85% short from day traders is pretty significant. And CAD CHF, 75% there. That's pretty good as well. I'm not going to go over the percentages for every single one of these because you can see them yourself, so feel free to pause the video if there's a certain asset that you want to get more information on. Did you know Trader Nick has a daily live show every Monday through Friday? Nick and our featured traders give their thoughts and analysis and even share their trades live for you every morning. We cover news events live as well, watching markets spike and then giving analysis immediately following. If you want to join the live stream community, look out for our live stream schedule on the A1 Twitter account each week, or consider turning on notifications and never miss another news event. But I'm going to go ahead and move on into our indices. Well, I should keep this in mind. So 85% short here is pretty significant on CHF JPY. And then when it came to the major currency pairs, 83% long is also pretty significant. So those are our two front runners for our smart money indicator. But let's jump on into the indices, and we have no bearish signals, but we do have 4 bullish signals, because right now the majority of day traders are shorting the S&P 500 and the US 30 along with the JP 225 and the German 30. Now the German 30 is 86% short from day traders, but we're probably not going to take a look at the German 30 in the smart money indicator. If I'm being honest, we'll probably just stick with currency pairs, but US 30 is also heavily shorted, as well as the S&P 500 from day traders, 77% and 82%. And then if we want to, we'll just go ahead and throw in our commodities and crypto in with the rest of this list, because it's not too much more to add. So there we go. We have Bitcoin. Bitcoin is also getting a bullish indicator here, because the day traders are 78% favored short on Bitcoin, and US oil adds a bearish signal here. The crowd is heavily favored bullish on oil at 76%, and again, bearish indicator for us. Gold, NASDAQ, and UK 100 are all neutral biases. So there we go. I think we have our assets that we're going to take a look at. We are going to look at, let's see here. We're going to look at USD CHF for the long side, and we'll look at CHF JPY on the short side. So it's two Swiss franc pairs, CHF JPY, USD CHF. Let's start off with USD CHF and just see what information this has for us. So here's USD CHF, and this might not look like much at first, but let me explain what we're looking at. So this white dotted line here is price, and I know that it looks like price has been going in nothing but a straight line, but if you take a look at the actual price chart on like TradingView or something, it's really kind of the same. So we can see information all the way back to November 28th, all the way up to present day. And if you actually look at that little box right there, as we move day by day, you can see every single day and roughly where price closed at. It's not an exact number. It's very close to the exact number though. We'll see price dip down to 0.84 towards the end of the year, 0.85, and then back up 0.86, 0.87. So on and so forth, back down to 0.86. You can see that price really hasn't moved a whole lot over the past 3 months when it comes to USD CHF. And in fact, if we do open it up on TradingView, that's exactly what we see right here. Not a whole lot of movement. Yes, it does have its ups and downs, but if we look back, we could see back to November 28th, I believe it said. So that would be this candle right here. It's literally trading at like the exact same range it was 3 months ago. And yes, it did dip down here, but what do we see? If you look over on the right side of the screen, we see price is at 0.84, and then price goes up to 0.85, 0.86, back down to 0.85 for a day, back up to 0.86, 87, 88. But we never cross up into 0.9, at least not for a while, way back here, back before we have information, that data listed here in the Edge Finder. So yes, even though it does look like a straight line, price really hasn't done anything like over the past 3 months. So what does retail and COT have to say about it? Well, retail has stayed consistently bullish on this for a long time, probably longer than they should have, considering price just really hasn't done anything. I mean, I suppose if you were bullish from the beginning of the year, you've got a little bit of momentum here, but nothing crazy, not a crazy move by any means. So what we see here is this red line. This is net retail positioning. If we're above zero, with which both COT and net retail positioning are above zero, that means that they're bullish. So retail has been bullish and stayed bullish this entire time. COT is also bullish, but they were much more bullish back in December. By the time the new year was coming around, they lost pretty much all of their bullish momentum. And yes, they are still technically bullish on the asset, but they are way down here compared to retail, which is up here. So long term, it seems like COT data and retail both agree about being bullish on USD CHF. However, retail is much more confident than COT is, which is probably not a good sign. The other pair that we said we were going to take a look at was CHF JPY, which is right here. And here we go. Now we have a lot more to take a look at here. We can see price has been bouncing around and in fact had a huge upward move towards the end of the year last year. December 18th all the way to January 11th, and then it kind of topped out right there. Huge move to the upside, and in fact, I'll pull it up on our trading view chart as well. CHS, nope, not USD, CHF, JPY. And if I go back to November, you can see how this kind of mirrors what we see here, right? We got a peak right here, and then it dipped back down, and then it's kind of been spiking over the last month or so, which is what we see right here. Now, what do COT and retail have to say about this? COT officially became bullish around the end of the year last year, and they've stayed bullish on CHF JPY, but just a little bit. They're just barely above the zero line again, so they are favored bullish, but not by much. And we can see that that shift happened right in the middle of this big move here. Had a big spike to the upside, came back down, retested a bit, and then look, that's when that spike in that COT positioning happened. Right before this retest or reset right here, right? Before this big upward momentum move here, that's when COT interest jumped the most, and they officially became bullish and rode this bullish wave to the top. But they didn't get too greedy and get overly bullish on this because it stopped out, it peaked right here, and it hasn't been able to break through this level of resistance yet. What has what has retail done? Retail has been bullish, now what has retail done? Retail has been bearish, and they've stayed bearish the entire time, whereas COT flipped from bearish to bullish on this asset. Retail has stayed bearish the entire time. They've, right here was a good time to be bearish, but ever since then, price keeps moving higher and higher and higher without retail traders who are seemingly getting more bearish on it, thinking that, I guess, price has gotten too high and surely it has to come back down at some point, but nothing in the markets is guaranteed. And so price has been moving higher and retail has just been wrong on this one. There's no reason for retail to still be this bearish on an asset that's been trending this bullishly for this long. So I'm going to say retail was wrong again on this one as well. So there we go. That's a look at all of our retail positioning on all of our assets, as well as a little bit of what the smart money indicator can do when it comes to comparing what COT data's positioning is and retail's positioning on top of the actual price chart for, again, all of these different assets here. So really interesting and useful information there. If you want to find out more about the Edge Finder, you can find it in the links down in the description below, as well as on our website, a1trading.com. And if you want a discount on the Edge Finder, you can use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.